If you invested $1 million with your investment manager and it grew to $3 million, you'd be super excited, right? But then what if within a 2-year span, not only did the money go from 1 million to 3 million, but then it went down to 700,000? Would you fire your investment manager? Hey, it's Eric with Jazz Wealth Managers, where we don't just invest your dough. We like to educate you on your dough. Now, there are some, I would say they're buzz funds, buzz investments, kind of like buzzwords that are out there that a lot of people look at. And in 2020, some were super popular. And now that we've had a bear market where the market's pulled back more than 20%, these funds and investments in general have not been near as popular. Now, the problem I have with all of this and what I want to break down is a bit of the tortoise and the hare story, as interesting as that may be or not be. The fact is that when you're investing in something, the biggest problem I see when I hear clients calling our investment firm is when the market falls, they start to freak out. And especially if the market's falling at a rapid pace, they're saying things like, oh my goodness, I don't want to lose all of my money. But then there's this other factor of it when the market is going up that they're really upset when we're not in certain funds that want, to take advantage of all of the greed that's out there. And I'm not saying that this is our particular clients in all circumstances there, but what I'm saying is it's a common trend that I'm seeing, especially with the younger people that are begging for 401k companies to put Bitcoin and certain funds within their 401k so they can particularly invest in this. So I want to show you charts. I want to break this down for you, exactly what I'm talking about. So in the intro of this video, I talked specifically about a fund that we were talking about that if you invested $1 million in and it went all the way up to 3 million and then back down to 700,000, would you fire your investment manager? Well, that fund specifically is one that I want to look at, as well as Bitcoin. So if we're taking a look here, this is the S&P 500 year to date, and this is also ARK Innovation ETF, ARKK, and Bitcoin. So if we're looking right here, the ultimate thing is the market's down 20.37%. Bitcoin and ARK down almost 70%, give or take, on each of those. Now, I know what you're thinking. You're going to say, well, but what about, before, because it went up? I understand that it went up, and this is what I want to show you and break this down for you. So if we look here at ARK, this is the real one I want to talk about. Kathy Wood was a super popular investment manager in 2020 as her fund outperformed the market just to a point that it was just almost embarrassing how well she did. And this shows that chart right there. The problem is a lot of people weren't getting into this fund until at a point where, let's just say maybe January of 21, I had clients calling and actually asking me, hey, what about the ARK fund? And so if you get in this point, you're going to get a little upside and then you start to write it down. And the question is, well, when do you get out? There's the crystal ball effect that nobody knows exactly what's going to happen here. But this is the perfect image of the tortoise and the hare. It truly is, because this is where if you put $1 million in, it would have grown to over $3 million in just over a year period of time, and you would have felt really good. But at the same time, it fell so fast that you would have actually fallen all the way to where today is. Your 1 million would now only be worth 700,000. And we don't know when we will or will not get out. This is a bit like sitting at a roulette table, if you ask me, and putting it on black or red, and you're up a little bit, and then you try to determine what you're going to do. The question is, when do you walk away? And so versus, the S&P 500, if we look here, the average annual return is only 5% over the past 2 years because of the downturn, but really you would still be up 14.89% total. So if you had that $1 million, you would have made almost 150,000. Not near as cool as the 3 million that you had in the other fund, but you would have at least had this opportunity to keep some money in your pocket versus potentially go negative. Now from there, let's look a bit at Bitcoin, because Bitcoin is a bit different. When it comes to Bitcoin, the thing about it is I'm only showing you a 2-year chart here. And in that 2-year period of time from January of 2020 Until now, it has outperformed the market significantly, even if you rode the waves up and down. Now, the problem is, again, a lot of people tend to not jump into something until it's already super popular and it's already far outperformed the markets. So if that were the case, I have known people that bought in near the top of Bitcoin, and as it's continued to fall, now they're sitting there holding it. And I say all this to say the biggest thing we have to watch out for is controlling the emotion of investing. But if you are an emotional investor and you already have trouble with this, make sure that you're not jumping in on trends, because we will see these trends come back where there's the next ARK, or maybe ARK does come back, or maybe Bitcoin comes back, or whatever the case is. Really think through this, because 401k companies are now starting to allow things like Bitcoin into some of their investments. And what I encourage people to do is say, you know what, this is a bit, as I say, like gambling. Take some of this money and put it over here. And yes, sure, let it ride, but don't put your retirement on that. Put your retirement in more of the hare versus the tortoise versus the hare. Let this thing slow, steady grow. If the Bitcoin takes off and you are able to make a lot of money on the side, awesome. But if you're not, you know what? You're not out everything. So just be careful with this, because this is something that I'm seeing a lot of right now. People wanting to really take excessive risk, and even in the down market, start throwing things and things that are down. But if it doesn't have a long-term history of a performance, it's really hard, because we don't know where it's going to go from here, such as Bitcoin and, again, the ARK ETF as well.
Thanks for watching. If you want to watch more FinTips videos, click here. Be sure to like and subscribe also.